Hello everyone, this is Kunal Shah, Head of Commodity Research from Nirmal Securities Private Limited, and this is the monthly outlook for commodities, and we are going to discuss what is going to happen in commodities complex in the month of February, what has happened in the month of January, what were the reasons for the same for all the individual complex, and the outlook for the month of February. So first, let us discuss and let us start with the most sought after commodity complex, that is precious metals. And after the stellar performance in the month of December, in the month of January, we've seen a significant correction taking place in gold, where gold prices have corrected from $2,100 to almost $2,000 on CME. In India also, it is corrected from 63,500 to 62,000 rupees. As far as silver is concerned, there was a sharp fall in silver prices in the month of January, where we've seen silver have declined from 74,500, 75,000 to almost 70,600, 700. So almost a fall of 4,000 rupees on the Indian Commodity Exchange on MCX. Well, what has changed for bullions? Why there was a profit taking, and what is the way going forward? So the narrative in the month of January was that there is going to be aggressive rate cuts in the year 2024, and hence gold and silver prices were expected to move up sharply. But throughout the month, we've seen a stronger than expected economic reports from the US. We've seen stronger job report coming in. We've seen stronger report from the jobless claim front. We've seen inflation also nudging up from 3% to 3.4%. We have seen GDP also shooting up. We've seen US manufacturing sector also doing well. All the growth engines of the US economy were seems to be doing more than well, and that remains one of the main reasons why the dollar strengthened from 102 to 104.50, and that led to correction in bullions. The US 10-year bond yields have also bounced back from 3.6% to almost 4.1%. So both these factors, combination of a stronger dollar, higher yield, stronger economic data, have led to fall in prices of precious metals. On other hand, there was very bullish news on the geopolitical front, where we've seen a significant disruption in the Red Sea, in the Middle East, where US and UK have attacked Houthi rebels, and we've seen retaliation coming from them. And it seemed there is no de-escalation taking place. And in spite of all the geopolitical uncertainty, we have seen gold and silver have declined gradually. Stronger than expected US economic report have outweighed the geopolitical issues. So, in spite of all the geopolitical uncertainty, we have seen gold prices have remained under pressure. So, now going forward, what is the case? What is the likelihood of what is going to happen in the month of February? So, the entire reversal of gold and silver took place after the US inflation data, which indicated that US inflation has moved up, have edged up. So, this month, again, the expectation, the consensus of the top economists and the top investment bankers are indicating that there is likelihood of further upside or uptick in the US inflation. That's not good news, because every time you see the uptick in the inflation, the prospects of the rate cut gets dimmer. And the fact is, whenever the prospect of the rate cuts gets dimmer, the likelihood of gold remaining under pressure will be higher. So we expect going forward some more correction, some more profit taking to take place. We are not fundamentally bearish on both commodities. It is just the temporary phase where, because of the factors like higher inflation, stronger economic data, are leading to profit taking in the segment. If the US inflation surges, I think the data is lined up for the 14th or 15th of February, and if the US inflation is higher than expected, then we are going to see another correction in commodities. So watch out for that data. A dip in gold till 1995 to 1990 looks buying levels. A dip in silver at 2150, $2180 is a buying level. So silver around 69,000, gold around 61,500 are the buying opportunities. So these are the levels where we recommend, buying gold silver in spite of all the grim news.